Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 131, recorded on September 1st, 2024. This podcast is for entertainment only and is not investing advice, so please do your own homework. Well, we'll start with the market update and outlook, get into the top Bitcoin news, talk about this week's featured post on Substack, Bitcoin Fortress. And we'll end with the shout outs, starting with the news. Wall Street's benchmark S&P 500 index on Friday closed out both the week and August in positive territory. The latter achievement was especially impressive considering the plunge experienced by the average at the beginning of the month. Yes, the Black Monday. In what is now infamously known as Black Monday 2024, the S&P slumped 3% on August 5th due to a combination of the unwinding of the yen carry trade and growth fears sparked by the July non-farm payrolls report. The rest of the month was all about rebounding, driven by economic data on inflation and retail sales that helped becalm recession fears and a signal by the Federal Reserve that it was ready for interest rate cuts. Yes, the system is very, very fragile. The spotlight this week was on chip giant NVIDIA's results. The company showed the AI craze was very much real after more than doubling quarterly revenue. However, for market participants now used to blowout results and guidance, the firm's latest outlook failed to meet up to the loftiest of expectations. For the week, the S&P 500 climbed 0.2%, while the blue chip Dow advanced 0.9%, and the tech-heavy Nasdaq slipped 0.9%. Looking ahead, Wall Street will see a holiday-shortened week, with Monday being Labor Day here in the United States, so everybody's out grilling and enjoying the the unofficial end of summer. Investors will still have plenty to look forward to, especially in terms of economic data. The labor market will be firmly in the spotlight with the latest job openings and labor turnover survey, or JOLTS, scheduled for Wednesday, followed by ADP's monthly report on private employment on Thursday. Things come to a head on Friday, which will see the release of the August non-farm payrolls report. Note that the July payrolls update had sparked growth concerns and had led to Black Monday 2024. The jobs data is also expected to solidify the size of the anticipated rate cut by the Federal Reserve in September. Taking a look at next week's earnings calendar, some notable names that will announce their numbers include cloud security firm Zscaler, retailer Dick's Sporting Goods, and Dollar Tree, and chip maker Broadcom. Getting into the Bitcoin news. First up, we have Good Morning Bitcoin, Friday, August 30th, 2024. This is from No BS Bitcoin. Just a few news items. OpenSats grants long-term support for Alex Gleason. Alex recently launched Ditto, a decentralized self-hosted social media server with a built-in Nostr client and relay compatible with Mastodon apps. With this grant, Alex aims to introduce features like Nippo5, username purchases with Zaps, a profile customization shop, and better Mastodon app support. A solo Bitcoin miner does it again. Someone successfully mined block number 858978 on the Bitcoin's blockchain, earning a reward of 3.275 Bitcoin, valued close to $200,000. More on that later. Prominent whistleblower and Bitcoin user is missing in Nigeria. Nigerian journalist David Hundian reports that whistleblower PDOM Nigeria is missing, and his online accounts have been compromised. PDOM used Bitcoin and US Tether, to evade censorship, and is presumably targeted by the Nigerian regime. The reporter suspects the regime accessed PDOM's information through Binance, which may have shared or been coerced into revealing PDOM's Know Your Customer details. EU wants to investigate Telegram under the Digital Services Act. EU legal and data experts suspect the app understated its EU presence to avoid regulations for platforms with over 45 million users. At the same time, France is investigating Telegram for alleged criminal activity, leading to founder Pavel Durov's arrest. The state is coming for your privacy. Dutch Foundation requests human rights evaluation of AMLD5. Human Rights in Finance asked the European Commission to review the fifth anti-money laundering directive for privacy and procedural issues. EU laws must respect basic rights, including privacy, as stated in the Charter of Fundamental Rights, reports The Rage. OpCat Research Fund, sponsored by Starkware. Starkware announced $1 million bounty for compelling arguments either in favor of or against activation of OpCat. In other news, the Hodler's Digest from Cointelegraph.com. We'll go through these stories and try to avoid the shitcoin stories. Let's see. Major global cryptocurrency exchange Binance seized cryptocurrency from Palestinians as per request from Israel, according to sources from a prominent industry executive. Ray Youssef, co-founder of the peer-to-peer crypto platform Paxful and P2P crypto platform No Ones, took to X on August 26 to report that Binance confiscated funds from Palestinians at the request of the Israel Defense Forces. Binance has seized all funds from all Palestinians as per the request of the IDF. They refused to return the funds. All appeals denied, Youssef wrote, citing several sources, including a letter from Israel authorities passed on by Binance. He argued that the measure affected all Palestinians, predicting that other countries like Lebanon and Syria are likely to come next. All Palestinians are affected, and judging by the way things are going, all Lebanese and Syrians will get the same treatment. Not your keys, not your coins, Youssef stated. And that is a fact. Pavel Durov, the founder and CEO of messaging app Telegram, has been released from custody after being charged by French authorities and placed under judicial supervision following a court appearance. According to an August 28 Bloomberg report, French prosecutors said they had charged Durov with criminal offenses relating to his role at Telegram. He was barred from leaving France and required to post bail of 5 million euros, or $5.5 million, before being released from custody. A widely shared video from Russian state-owned news outlet RIA Novosti shows Durov walking free from a Paris courthouse on August 28. Police delivered Durov to court after detaining him at an airport north of Paris on August 24th. Authorities initially extended the Telegram CEO's custody to August 28th, when he was expected to either be released or face charges in court. Well, I guess this is some shitcoinery that's worth talking about. Devin Finzer, CEO of non-fungible token marketplace OpenSea, reported the company had received a Wells notice from the United States Securities and Exchange Commission suggesting a potential enforcement action. In an August 28th X post, Finzer said the SEC had issued the Wells notice, alleging that the NFTs traded on the marketplace may qualify as unregistered securities. The OpenSea CEO said the platform was ready to stand up and fight any potential enforcement action. This is a move into uncharted territory, said Finzer. By targeting NFTs, the SEC would stifle innovation on an even broader scale. Hundreds of thousands of online artists and creatives are at risk, and many do not have the resources to defend themselves. The OpenSea CEO added, in addition to standing our own ground, we are pledging $5 million to help cover legal fees for NFT creators and devs that receive a Wells notice. Every creator, big or small, should be able to innovate without fear. So the SEC is going after the monkey JPEGs. A federal judge has ordered former FTX Digital Markets co-CEO Ryan Salam to appear for a hearing despite withdrawing a request to vacate a guilty plea. In an August 29th filing in the United States District Court for the Southern District of New York, Judge Lewis Kaplan said Salam was required to appear in court on September 12th as part of the conditions of his release on bail. He was initially scheduled to report to prison to serve a 90-month sentence starting on August 29th, but received a delay to October 13th after reporting medical complications because of a dog bite. On August 21st, the former FTX executive's legal team filed a petition to have the court vacate his guilty plea, alleging authorities agreed not to pursue an investigation into his partner, Michelle Bond. However, after prosecutors unsealed an indictment for campaign finance law violations against Bond on October 22nd, Salam withdrew his petition and said a ruling on the matter could be made in her case. A Brazilian Supreme Court justice has ordered social media platform X to be suspended in Brazil after Elon Musk refused to name a legal representative for the company. According to an August 30th Associated Press report, Justice Alexandre de Moraes, who looks like a comic book villain, followed through with his intention to shut down X's Brazilian operations if Musk failed to appoint a legal representative by August 29th. X's global government affairs team said the platform would not comply with Moraes' illegal orders to censor his political opponents. It's unclear what X's next move may be for Brazilian users. Musk has made many posts claiming Justice Moraes was evil and a dictator for his alleged illegal political censorship. Moraes has been investigating X for allowing and promoting misinformation related to former Brazilian President Jair Bolsonaro. At the time of publication, Brazilian X users reported they could still access the social media platform. According to Statista, more than 20 million of the country's roughly 217 million residents use X. And that pretty much... Oh, well, here's some FUD of the week. Mt. Gox and U.S. government could introduce 15 billion Bitcoin selling pressure. Bitcoin's sluggish momentum could carry over into September as Mt. Gox and the United States government could introduce nearly $15 billion worth of additional selling pressure. Over $14.8 billion worth of Bitcoin could soon flood the market and put more downward pressure on price. The U.S. government holds over 203,000 Bitcoin worth $12.1 billion, while defunct crypto exchange Mt. Gox is set to distribute another 46,000 Bitcoin worth over $2.7 billion. Oh well, cheap sats, stay humble, stack sats. And that about wraps it up. Next up is from Crypto Potato. And this was posted today. 5 bearish and 4 bullish factors for Bitcoin in September. The world's leading cryptocurrency has traded in a sideways channel ever since the early 2024 Bitcoin ETF rally. Market bulls started it in earnest in October as a result of premature reports that SEC approvals were around the corner. After that, Bitcoin went from 27,000 on October 14th to an all-time record high of almost 74,000 on March 14th. That represented a 170% gain for crypto investors in just 5 months. The United States Securities and Exchange Commission approved 11 Bitcoin ETFs on January 10th, 2024. SEC Chair Gary Gensler said investors should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto. The Bitcoin ETF rally delivered a whopping average annualized ROI of 415%. It was by far not the first time the largest cryptocurrency delivered eye-popping returns. Also, by far, was not the most Bitcoin has returned to investors over comparable timeframes in previous markets over the past 15 years of its existence as an open source blockchain operating over the internet. However, since peaking in March, Bitcoin has traded sideways in a range-bound channel, driving the traders crazy. So when will April's halving supply cut kick in and touch off another rally based on Bitcoin's limited inventories? The market is in different waters, to be sure, with the asset reaching a new all-time high before its halving. That hasn't happened in previous cycles. Regardless, there are signs this bull run has room left to run. But first, here are the headwinds Bitcoin's price faces in September. Number one, $33 billion government supply overhang. According to crypto research company Kaiko, There's the looming threat of a $33 billion Bitcoin supply glut because several governments have stashes they might offload. Plus, recovered Mt. Gox funds are being restored to their owners. History from earlier this year showed us that when authorities and former users of the defunct crypto exchange decide to dispose of their assets, Bitcoin's price suffers. Number two, Bitcoin ETF paper hands. Bitcoin purists like Andreas Antonopoulos warned about this years ago. Now that Wall Street is interested in cryptocurrency, its buying and selling pressure affects the price. September is usually a month of selling on Wall Street. Since 1950, stocks returned investors an average loss of 0.7%, making it the worst month for the asset class. The selling has already started in Bitcoin ETF markets, which saw outflows for 4 consecutive days from August 27th through 30th, totaling $454 million, according to Farside data. Number three is Bitcoin's cyclical September doldrums. Crypto has been no different from stocks in its short history. Bitcoin has only generated positive returns in September 3 times in the last decade. This seasonal trend could affect prices this year. Number four is U.S. election jitters. The four-year U.S. presidential cycle usually leaves financial markets uncertain until democracy has prevailed again with another peaceful transition of power and more policy certainty. The big money waits to make its moves until after Election Day. And number five, post-halving consolidation. Markets are right in the time frame after previous halvings when Bitcoin's price tends to decline before rallying to new all-time highs. Once all the sellers shake out and Bitcoin finds its post-halving bottom, the bulls take over and run it up to new heights. And there's a nice picture of 3 bears. So there's 4 long-term Bitcoin price supports. While Bitcoin markets may have tough waters ahead based on the factors listed above, here are 4 long-term Bitcoin price supports for bulls and bears to consider. Number 1, financial tailwinds for Bitcoin's price. The Fed is pivoting to low rates. This is Bitcoin's time to shine. The U.S. Federal Reserve sets the tone for the global financial economy by adjusting target interest rates for the supply of new dollars through daily lending markets in time with prices and employment. Now that the Fed has called for rate cuts to shore up slowing labor markets with post-pandemic inflation, interest rates will begin to fall again and prices are likely to start rising. The way the credit economy works usually causes that wave of rising prices to happen first, and with the most force in financial markets like the New York Stock Exchange and NASDAQ. The more liquid the market for a trading asset, the more high growth its future prospects are, the more leverage it tends to move against the benchmark change in interest rates. That goes for Bitcoin big time. For the previous 3 supply cycles, the daily new issuance was cut in half every 4 years. 1 year after the 2012 halving, Bitcoin was up 50,000%. About 18 months after the 2016 halving, it had gone up 8,500%. Federal interest rates were functionally 0% during the entire post-2012 halving Bitcoin bull market. However, Bitcoin still delivered market-whopping alpha compared to stocks in the 2016 cycle. The Fed began steadily hiking rates in late 2015, reaching 2.4% by mid-2019. Bitcoin surged to above 64,500 on Sunday, August 25th, after Fed Chair Jerome Powell announced on Friday that the central bank would soon begin cutting interest rates. Over the week, Bitcoin corrected but found support at 58,000 instead of falling as low as 55,000 as it did in the last 2 big corrections in August and July. That could signal the Fed pivot is emboldening long-term bulls. Number 2, Bitcoin goes to Washington. The embrace of Bitcoin by both U.S. political parties is very promising for long-term price support as markets grow more assured that the United States government groks Bitcoin and has the will to back the crypto industry. The more calculated the risks are for the rewards of innovating and capitalizing valuable contributions in the blockchain space. Crypto expert Andrea Barbon, a Swiss University of St. Gallen finance professor, recently told Forbes, while Bitcoin has often been viewed as a hedge against economic turmoil, its future performance could hinge on the upcoming U.S. elections. So far, Donald Trump has been more supportive of crypto, and a return to the White House could bring regulatory shifts that favor digital assets. But regardless of how Republicans and Democrats parcel up the levers of power this November, crypto companies are beginning to wield enormous influence in Washington. They have made the most political donations in 2024, according to a report by Public Citizen, a nonprofit DC consumer advocacy watchdog. Number 3 is bullish smart money. Participants representing the smart money in crypto, for example, MicroStrategy co-founder Michael Saylor and Blockstream CEO Adam Back, are outlandishly bullish for Bitcoin this cycle. Saylor recently confirmed in August that he personally owns Bitcoin in an amount worth some $1 billion at the current market prices. Adam Back, meanwhile, has an $80,000 Bitcoin price target in view. Back commented in late August that financial company Cantor Fitzgerald's $194 target for MicroStrategy stocks implies an $80,000 Bitcoin price. That would represent a 33% gain for the asset over its $60,000 long-term support level since March. Why is smart money betting on further price increases of this magnitude for Bitcoin? Because they believe the most securely scarce cryptocurrency is poised to become a major world reserve for massive private and public treasuries to engage in international trade. And number 4, bullish Bitcoin technical indicators. Bitcoin markets gathered strength to the upside last week, with exchanges increasing in volume as bulls took the price above 65,000, according to data from CoinMarketCap. That enthusiastic buy-up following the Fed's interest rate announcement is an early signal of the market's demand for the asset as rates go down and prices increase. Bitcoin and altcoin chart analyst Mr. Crypto posted to over 118,000 followers on X Tuesday that he expects to see an enormous parabolic move for Bitcoin sometime in the near future. Highlighting the descending flag pattern on Bitcoin's chart from March through August, often a bullish continuation pattern during a broader uptrend, Mr. Crypto asked, "Would you believe me if I told you this Bitcoin breakout has a target of 93,000? Earlier in August, the crypto investor said it is very likely that Bitcoin's price will return to the 68,000 level in the short term now that it's broken above 64. So, interesting. Stay humble. Stack sats. Next article, the Daily Hodl. Whales and sharks gobble up over $7,863,000,000 in Bitcoin as impatient, in quotes, traders drop their holdings, according to Santiment. This was published today. A prominent analytics firm says that deep-pocketed Bitcoin investors are gobbling up massive amounts of Bitcoin at the expense of retail traders. In a new post on the social media platform X, Santiment says the number of crypto wallets holding at least 100 Bitcoin has increased rapidly over the last 30 days. As crypto prices have let retail traders down, Bitcoin whales are growing in number. A net gain of 283 wallets holding at least 100 Bitcoin has emerged in just 1 month. The now 16,120 such wallets on the network have broken a 17th month high. Santiment also says that Bitcoin sharks, or entities holding at least 10 Bitcoin, are loading up on the crypto king. Furthermore, the analytics firm says Bitcoin whales and sharks have added more than $7.863 billion worth of Bitcoin to their stacks in just 1 month. Over the past month, wallets with 10 to 10,000 Bitcoin have collectively accumulated 133,300 more coins, while smaller traders continue to impatiently drop their holdings to them. Don't feed the whales, I guess, according to the meme. Using data provided by Santiment, on-chain analyst Ali Martinez tells his 69,800 followers on the social media platform X that Bitcoin supply on crypto exchanges took a massive nosedive after Bitcoin broke below 60,000 last week. Seems like some major players bought the Bitcoin dip. On-chain data from Santiment reveals a 40,000 Bitcoin drop in exchange supply over 48 hours, equivalent to about $2.4 billion. This aligns with a notable surge in exchange outflows. At the time of writing, Bitcoin is trading at 59,000, down slightly for the day. So the whales and the sharks are gobbling up Bitcoin. Next up, this article is from Bitcoin Magazine. Kind of an interesting topic, the impact of institutional investors on Bitcoin. something I'm actually going to be writing about and posting on Monday on my Substack. This was posted on August 30th. For years, Bitcoin enthusiasts have been expecting a significant change in the value due to the involvement of institutional investors. The concept was simple. As companies and large financial entities invest in Bitcoin, the market would experience explosive growth and a sustained period of rising prices. However, the actual outcome has been more complex. Although institutions have indeed invested substantial capital in Bitcoin, the anticipated supercycle has not unfolded as predicted. Institutional participation in Bitcoin has significantly increased in recent years, marked by substantial purchases from large companies and the introduction of Bitcoin exchange-traded funds earlier this year. Leading this movement is MicroStrategy, which alone holds over 1% of the total Bitcoin supply. Following MicroStrategy, other prominent players include Marathon Digital, Galaxy Digital, and even Tesla, with significant holdings also found in Canadian firms such as Hut 8 and Hive, as well as international companies like Nexon in Japan and Phoenix Digital Assets in the UK, all of which can be tracked via the new Treasury data charts available on site. And there's a link here in the article to that. That's something that I've also post quite a bit in my writing because it's quite interesting to watch the Treasuries change. In total, these companies hold over 340,000 Bitcoin. However, the real game changer has been the introduction of Bitcoin ETFs. Since their inception, these financial instruments have attracted billions of dollars in investments, resulting in the accumulation of over 91,000 Bitcoin in just a few months. Together, private companies and ETFs control around 1.24 million Bitcoin, representing about 6.29% of all circulating Bitcoin. To understand the potential future impact of institutional investment, we can look at recent Bitcoin price movements since the approval of Bitcoin ETFs in January. At the time, Bitcoin was trading at around 46,000, although the price dipped shortly after a classic buy the rumor, sell the news scenario. The market quickly recovered, and within 2 months, Bitcoin's price had surged by approximately 60%. This increase correlates with institutional investors' accumulation of Bitcoin through ETFs. If this pattern continues and institutions keep buying at the current or increased pace, we could witness a sustained bullish momentum in Bitcoin prices. The key factor here is the assumption that these institutional players are long-term holders, unlikely to sell off their assets anytime soon. This ongoing accumulation would reduce the liquid supply of Bitcoin, requiring less capital inflow to drive prices even higher. The accumulation of assets by institutional players is significant. Its potential impact on the market is even more profound when you consider the money multiplier effect. The principle is straightforward. When a large portion of an asset's supply is removed from active circulation, such as nearly 75% of supply that hasn't moved in at least 6 months, as outlined by the Hodler waves, the price of the remaining circulating supply can be more volatile. Each dollar invested has a magnified impact on the overall market cap. For Bitcoin, with roughly 25% of its supply being liquid and actively traded, the money multiplier effect can be particularly potent. If we assume this illiquidity results in a $1 market inflow increase in the market cap by $4, 4x money multiplier, institutional ownership of 6.29% of all Bitcoin could effectively influence around 25% of the circulating supply. If institutions were to begin offloading their holdings, the market would likely experience a significant downturn, especially as this would likely trigger retail holders to begin offloading their Bitcoin too. Conversely, if these institutions continue to buy, the Bitcoin price could surge dramatically, particularly if they maintain their positions as long-term holders. This dynamic underscores the double-edged nature of institutional involvement in Bitcoin, as it slowly then suddenly possesses a greater influence on the asset. I would say on the asset's price. Institutional investment in Bitcoin has both positive and negative aspects. It brings legitimacy and capital that could drive Bitcoin prices to new heights, especially if these entities are committed to long term. However, the concentration of Bitcoin in the hands of a few institutions could lead to heightened volatility and significant downside risk if these players decide to exit their positions, aka paper hands. And then they also have a YouTube video at the bottom of the article that you can check out if you like. I will post all of the articles I review, as always, in the show notes. Next up, from Bitcoin.com News. This was posted yesterday. Bukele states Bitcoin was an effective rebranding tool for El Salvador. Nayib Bukele, president of El Salvador and one of the most popular heads of state today, recently evaluated the process that El Salvador has gone through regarding its Bitcoin allegiance and how it has affected the country's image internationally. In a recent interview given to Time magazine, Bukele reflected on the benefits and downsides of adopting Bitcoin as legal tender in 2021 when he passed the so-called Bitcoin law with a supermajority in the Salvadoran Congress controlled by his party Nuevas Ideas, or New Ideas. While Bukele admitted that Bitcoin has not developed as he wanted it to, with only 12% of Salvadorans having made at least one Bitcoin transaction after all the resources spent in the national Chivo Bitcoin wallet, he explains that it also served other purposes. He stated, "It gave us branding, it brought us investments, it brought us tourism." Damien Merlot, one of the main marketing advisors of the Bukele administration, recognized that the Bitcoin move was genius, calling it the great rebranding. "We could have paid millions to a PR firm to rebrand El Salvador. Instead, we just adopted Bitcoin," he told Time magazine. However, this move towards Bitcoin has already caused problems for El Salvador and its relations with institutions like the International Monetary Fund, who first pushed against this move, calling Bukele to drop this policy due to different risks. This stance also hindered the process of getting credit from this organization. However, this posture seems to have softened, and the country recently reported progress in the negotiations with the institution, stating that they needed to enhance transparency and mitigate potential fiscal and financial stability risks from the Bitcoin project. So, yeah, I think it's definitely helping El Salvador for sure. Part of the problem with top down is that Bitcoin really needs to be bottoms up, and there's always people suspicious of the government's intentions. Next up, we'll get into mining a little bit. This was posted on Bitcoin.com as well. This was posted today. Bitcoin miners faced the leanest month of 2024. August earnings hit the year's low. The ongoing effects of the Bitcoin halving are keeping miners on their toes, with hash price staying low and on-chain participants shelling out minimal fees. Data from the block.co reveals that miners experienced their leanest months of earnings in 2024 so far. A total of $851.36 million was generated between subsidy and fees, with $20.76 million of that sum coming from on-chain fees. August mining revenue was $99.75 million less than July's figures, and users contributed $4.14 million less in on-chain fees compared to the previous month. Between block heights 855,014 and 859,303, Bitcoin miners managed to obtain 4,289 blocks. Founder USA secured 1,248 blocks, capturing 29.1% of the total, while Antpool uncovered 1,074 blocks, securing 25.04% of the share. This means that two mining pools, Founder USA and Antpool, scooped up 54.14% of the total 851.36 million revenue. Miners hit the jackpot with some hefty fees paid out on August 22nd when Babylon initiated staking. Thanks to their significant computational power, Foundry and Antpool emerged as some of the biggest winners on those high fee blocks. August earnings data highlight a pivotal moment for Bitcoin miners, emphasizing the intense rivalry amongst the industry's key players. As miners grapple with economic challenges stemming from reduced hash price and lower fees, the influence of major participants points to a widening gap that could redefine the profitability of Bitcoin mining. Yet, if hash price climbs in tandem with increased activity, miners might just find themselves reaping the greatest rewards within the ecosystem. And yes, mining is a tough, tough business for sure. In other mining news, the solo Bitcoin miner hits the jackpot with a $200,000 block reward. Another solo miner has beaten the odds and processed a block on the biggest crypto network, pocketing 3.275 Bitcoin, or just shy of $200,000 as a reward. The lucky miner processed block number 858978 at 12:21 p.m. Eastern Time, according to blockchain data. A total of 2,391 transactions were contained in the block, and the miner received $199,094 worth of Bitcoin for the work. Bitcoin mining is the business of processing blocks on the Bitcoin network. Blocks are full of data and are part of the cryptocurrency's blockchain, a super secure ledger containing transparent information about transactions. When blocks are processed, miners are rewarded with newly minted Bitcoins, but it's a difficult process. Mining has gotten more difficult over the years as the network has grown and become more secure. And miners are now rewarded less Bitcoin as a reward for their troubles. In April, the Bitcoin protocol's quadrennial halving event took place, slashing miner rewards from 6.25 Bitcoins to 3.125. Miners today are typically companies that run operations out of warehouses full of expensive, specialized machinery, often giving them an edge over individual miners. Sometimes, though, a solo miner can get lucky, although it's getting rarer and rarer for such a thing to happen. Last month, another solo miner hit the jackpot by solving a block and taking home a $200,000 reward. And so game theory would suggest that probably more and more people are going to want to plug in, and that's good for the network. The more solo miners, the better, actually, in my opinion. And finally, we have this from BitcoinNews.com. This was posted today. Lightspark unveils instant Bitcoin Lightning to U.S. banks payment solution. Lightspark, a company specializing in Bitcoin Lightning Network payments, has introduced a groundbreaking new solution called Lightspark Extend. This new feature allows businesses across the United States to send instant Bitcoin payments directly to bank accounts through the Lightning Network, making digital payments faster and more accessible than ever before. Lightspark Extend is designed to bridge the gap between the world of digital currencies and the traditional banking system in the U.S. It connects universal money addresses and Lightning-enabled wallets, exchanges, or bank accounts, providing businesses with a seamless, low-cost, and compliant way to make instant payments. David Marcus, founder and CEO of Lightspark, demonstrated the solution on his social media, showcasing how each payment is sent and settled almost in real time. He highlighted the potential for Lightspark Extend to increase the adoption of the Lightning Network by making it more accessible to businesses and individuals alike. Lightspark is also a partner of Coinbase, which has enabled the giant digital asset exchange to execute Lightning Network transactions. Through their partnership, Coinbase customers can now use the Lightning Network to send Bitcoin transactions instantly with a limit of up to $10,000. Digital asset exchanges such as Coinbase, Bitso, and Nubank utilize Lightspark services to enable Lightning Network support for deposits and withdrawals. Lightspark Extend allows businesses to sign up for a UMA address, which functions like an email address for money transfers. Instead of dealing with lengthy codes or complex passwords, users can make payments using an easy-to-remember address similar to sending an email. This approach simplifies the process and reduces the friction often associated with digital payments. Once registered with a UMA address, the businesses can link eligible bank accounts through a process facilitated by ZeroHash, a regulated U.S. financial institution. This integration enables businesses to send payments 24/7 without the need to wait for the traditional banking hours. Payments are transferred directly to recipients' bank accounts instantly, providing a faster and more efficient way to handle transactions. One of the key advantages to Lightspark Extend is its compatibility with the vast majority of U.S. banks. Extend is compatible with over 99% of U.S. banks that accept real-time payments, said Lightspark in their announcement. This broad compatibility means that almost any business in the U.S. can use this new solution to offer lightning-fast payments to their customers. The introduction of Lightspark Extend is particularly beneficial for businesses that operate across multiple time zones or require urgent payments outside of regular banking hours. Its 24/7 availability ensures that transactions can be processed anytime, day or night, without delays. The launch of Lightspark Extend marks a significant milestone for the company as it expands its services to the U.S. market. UMA, the Universal Money Address Protocol, is already available in 120 countries worldwide with companies like Coins.ph in Asia, Ripio in Latin America, and Hodler in Europe offering UMAs to their customers. Now with Lightspark Extend, U.S. businesses and consumers can also benefit from this instant payment solution. Marcus has a bold vision for the future of the Lightning Network. In a statement earlier this year, he stated his belief that Lightning Network would evolve into the global settlement system for various currencies. He stated, any corporation that needs to move money will end up using directly or indirectly Lightning Network and Bitcoin. Lightspark Extend also represents a step toward greater financial inclusion by democratizing access to fast, low-cost payments. From small e-commerce stores to large enterprises, businesses of all sizes can leverage this new feature to provide a better payment experience for their customers. For sending institutions, Lightspark requires that they have Lightning payment integration and implement the UMA protocol. For recipients, the company offers a seamless onboarding portal allowing them to receive UMA-powered payments with a real-time payments-enabled account linked to their UMA address. The announcement also emphasized the importance of compliance and security. All transactions are handled through Zero Hash, a regulated U.S. financial institution. However, it's important to note that digital assets managed through Zero Hash are not covered by FDIC or SIPC protections. As Lightspark states, Zero Hash accounts are not FDIC or SIPC protected or any such equivalent protections that may exist outside of the U.S. The launch of Lightspark Extend is a major step in the evolution of digital payments, enabling businesses and consumers to make instant Bitcoin payments with ease. So that's quite interesting, actually. And it'll be interesting to see how it rolls out, but it's great to see additional adoption on the Lightning Network and to see that continue to be built out on the layer 2. I also wanted to highlight before we wrap up that you might want to check out this week's featured post on the Bitcoin Fortress Substack. Articles entitled Human Action by Ludwig von Mises, a summary. So check that out. And if you like it, please subscribe. It's free. And I publish, I think, 3 posts a week now. Monday, Wednesday, and Friday is kind of the schedule that I'm on. And if you really like it, you can become a paid subscriber and help support my work. I want to wrap up with a shout out to the top boost on Fountain last week at God's Death with 225 sats. Thank you, sir. And with that, I will thank you all for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is included in the show notes. And with that, I will talk to y'all next week. Bye-bye.